Hi, welcome to the Market Alert for Thursday, the 16th of February 2023. So stocks and crypto soar despite hawkish Fed expectations accelerating. Stocks don't care, rate hikes sooner, recession sooner, crash sooner, emergency rate cuts sooner. I'll go into that in a bit more detail in just a moment. US retail sales soared in January. It's all inflationary data, hot data. Stocks claw back losses and more, but bonds remain hit after hot data. That hot data yesterday afternoon was the retail sales, the Empire State Manufacturing and Retail Sales. We also had the UK CPI, or CPI, as it's more affectionately known amongst traders. This coming out at 10.1. It was forecast at 10.3. There's no point in talking about that. Like I say, CPI is probably more apposite with regards to this. Now, just going back to this subhead here, I'm going to recommend a video for you, and I have to say it is one of the best videos I've ever seen. I can't understand why they keep pumping the markets to the upside, or the markets are fighting, or the banks are fighting against the Fed, and I can't explain it in 2 seconds and in the time we have in this video. But if you want to watch it, I'm just going to bring it up for you now. Okay, so this is the video. It's down at the bottom here. You can see why is the Federal Reserve provoking a financial crisis. And the author of this video, its best evidence is the channel, just in case you can't find it. We'll put a link in the description. But John Titus, this chap here, he has the best videos about the Federal Reserve and what they're up to behind the scenes, and he really knows his stuff. And what he's doing is piecing together the unrealised losses that the banks have got, showing where these have come from in the last 6 months, and then also combining this with the Fed's own data, and then putting it into a graph and explaining what each of these things mean and what the relationship is and why we are on the cusp of something quite big compared to what's happened in the previous crises that have gone on. But the Fed are not helping with this particular one. So it is a very, very interesting video. And when you've been through it, and if you think about why a stock's being pumped, you'll understand why they're being pumped, because of these losses on the balance sheet that he talks about here. At the moment, they're unrealised gains and losses, or unrealised losses. So it's fairy dust, as he calls it. Brilliant word. And you can see that this, even in 2008, we barely had a problem in the banks compared to what's going on behind the scenes. So for anybody that's interested, I would highly recommend this. I'm going to watch it another 2-3 times so I can get my head around what he's actually doing, and probably replicate the chart as well that he's got here and what he did, so I can actually keep an eye on this on a week by week basis. The next report for these unrealised gains, like I say, don't take too much of what I'm saying, but as you can see from the graph, if I can find it, again, just go back to that. The next report, banking report of losses, is going to be coming out on the 1st of March, which is only a couple of weeks away. So it's probably likely to do an update as well, and it's probably going to show further increase in losses as well, unrealised. And they're unrealised because they haven't been forced yet to close out. But it would make sense actually pumping the stock markets to increase the portfolio valuations to offset this. That's the crux of what I came to last night, or conclusion that I came to. So well worth a watch. Technical, but yeah, it's worth putting your feet on the desk, cup of tea, coffee, and watch it if you are really interested in the nuts and bolts of what's going behind. You should have a look at his other videos as well, when he talks about the repo crisis of 2019 as well, which again was, COVID was a cover for that. And I've always said that there's something happened in the financial system. You'll see him explain that in this as well, with the evidence to back it up. It's not just a conspiracy theory, but fact. Anyway, I will move along. Let's go and have a look, see what economic news we've got today. We've got core PPI today, and that's forecast to show an increase as well. We've got PPI month on month as well to show an increase. That's inflationary, but again, the markets still keep being pumped up, don't they, on this. At some point, someone's going to pull the rug under from the feet of this market, and it's going to be very, very interesting based upon what I watched last night in John Titus's video. So yeah, more inflationary data, more hot data coming out today as well. Okay, let's move along, have a look at the market's reaction to the retail sales and the ignoring of the UK inflation data during yesterday's session. So starting off with the Dow, we see the market moving up yesterday, reversing off the 20-bar moving average on news that, like I say, you can only describe as, well, it would actually be negative, but turned into a positive, of course. So there's the release of the news. And then the market moving back up and trading up 100, 200, 300 points off this in the Dow. Bit of weakness overnight. It made a new high, but coming back to the close at the moment in the 13-minute chart. Meanwhile, in the German DAX, big move yesterday. The low was picked up. I mentioned it in yesterday morning's alerts. Let's just have a look at that. I said watch the low. And unfortunately, because I was still editing and everything after I'd mentioned it, missed the chance. It was one of those you could hold all day, as can be seen here, apart from we had the news, but it was no big deal. If it's going to come out that positive, it's going to be used to move the market around. And boy, did they move the market around with it, moving up 150 points overnight with this news. Incredible. They just keep doing it. Again, weakness overnight though. We're through the high, and if we just go back to the daily chart, we certainly need a correction in this market. So there's going to be a one-day correction somewhere along the line. We've not had many, have we? It's just been the odd day where there has been a correction. Otherwise, the market's continued to move to the upside there. Overnight, you can see prices being slightly weakish. That's because the Dow's weak. Stopping at the 200 MA at the moment in the 5-minute chart. And then if we just go back and have a look at yesterday, you'll see where the Dow kicked off there. Well, this is the news to begin with. This is the release of the news, the retail sales. The market just stayed on the DP. They did a retracement. Market opened in the US, and off we went, and it never stopped. As you can see, they just kept going and going and going. So yeah, it's madness. But now I understand to a degree why we've got this madness, and that's because the banks are getting no help from the Fed. So in order to keep their balance sheets or to stop those unrealized losses becoming greater, then they've got to do something in order to pump up the balance sheet. And this is a way of doing it, of course. So that makes perfect sense now, because it doesn't make sense fundamentally, because given the inflationary cycle. Also, there's a bit of a problem here, because as you'll see from the video, the more that the Fed increase rates, the more the bigger the problem is going to be for the banks. So that's why he's not doing what we'd expect him to do, and just interest rates really have to be higher than inflation to have any impact, and that's why we're not seeing any impact, and all the data that's being released is coming out hot. So it's between a rock and a hard place. Old Powell is, he helped them all out with the QE, and now he's stuffed when he's coming to try and combat inflation. So the thing that he created with the QE in 2019 by printing 5 trillion is now come to bite him on the backside with inflation, because he said it wouldn't be inflationary, and then it was only going to be transitory, and now there's a major issue. So yeah, it's a battle between the banks and the Fed. That's what it is. Let's have a look at the S&P. Oh, actually, before we do that, let's have a look at the implied volatilities as well. Yesterday, we saw the market obviously moving up, so the implied volatility has moved down to 15.13, so moving down nicely there. Again, we want to see it down in these levels or below. That's where we want it, down at this 14 level for a really good correction in this market. In the S&P, same as the Dow, up yesterday and slightly down overnight. We're still above the high though at the moment in the S&P, unlike the Dow, obviously because it's a broader market. In the FTSE, well, it continues to move up. There's no stopping. The inflation's down 0.2. We've got strikes, war, recession, you name it, and the FTSE is making new all-time highs. And that's because obviously now, like I say, I get it. They've got to keep pumping these markets up to offset the losses that they're getting because they're not getting any helps. The Fed have got rid of the financial methadone. That's the problem. And then also decreasing the value of the securities by increasing interest rates, so they're not going to get the same return on them. So the FTSE yesterday, it is a FTSE, down to the 200 MA during the morning, and then it was just a one-way bet to the upside. Below yesterday's high at the moment, and also sitting at the close. GBP JPY, you can see the inside bar for yesterday, sitting on the 50 bar moving average though. A bit of a choppy one yesterday. Not a lot there. 100 point, well, just below 100 points in that one, about 80 points. GBP JPY came under attack with obviously the CPI numbers yesterday, down to 89% retracement. There's the move down. The dollar was strong yesterday as well, putting the metals under pressure because the dollar knows that rates are going to have to continue to move higher, so that's why the dollar's moving higher. And if we look at the metals, they're under attack because obviously the strength of the dollar. In fact, let's just have a quick look at the dollar before we look at the metals. So as can be seen here, the dollar up during yesterday's trading session, trying to break out of that sideways move that we've seen develop over the last week. And of course, as I just said, the impact is on the metals moving lower, the dollar moving higher. We've got a bit more weakness there. Tried to come back again yesterday, but as I said to you, we got to take yesterday's low out convincingly, and it did. There's the low for today. All you need is a switch around with that hot news at lunchtime if it is to be the case, and we'll see yesterday's low tested as well. The gold market also moving down sharply. There's a couple of areas of where they could find support there, but being battered over the last couple of weeks. And there's the battering continuing yesterday morning and then sideways for the remainder of the session. We managed to move up to the DP overnight and now stuck at the close there. So yeah, the metal's under attack because of the increase in the US dollar at the moment. Okay, that's it for this one. A bit longer than normal, but like I say, if you get the chance, go and have a look at that video and put your feet up, have a cup of tea. It's a long one, it's an interesting one, but absolutely fascinating as well. Okay, that's it for me for this one. As ever, thanks for watching. See you in the